Principles of Accountancy. Section 1. Hello, Dr. Khadijah. We are from Group 2. Today we will do the group presentation for Samsung and Apple Company. Introduction for Samsung and Apple Company. Samsung is a South Korean multinational manufacturing conglomerate headquartered in Samsung Town, Seoul, South Korea. Apple Incorporated is an American multinational technology company that specializes in consumer electronics, software and online services headquartered in Cupertino, California, United States. Financial statements are written records that convey the business activities and the financial performance of a company. Financial statements include the balance sheet, income statement, and cash flow statement. Vertical analysis for Samsung and Apple Company. The operating profit of Samsung Company showed a significant increase from 2019, $23,826 million to 2021, $45,131 million because the company generated more revenue from 2019 to 2020. The net income of Apple Company recorded the highest in 2021, $94,680 million. However, it showed a decrease from 2019, 21.24%, to 2020, 20.91%, because of the lower sales and higher expenses in 2020. Horizontal analysis for Samsung and Apple Company. The profit for the year increased the most, from -53.72% in 2019 to 55.92% in 2021, with an increase of 19.93% in 2020. This is because Samsung has been driven by strong mobile and chip sales, which has increased its revenue. Net income for Apple Incorporated Company increments from -7.18% in 2019 to 3.90% in 2020 and even increased to 64.92% in 2021. This is because net income is influenced by total income. Apple successfully attracted more customers by introducing advanced products, thus increasing its revenue, so its net income also increased. Ratio analysis for Samsung and Apple Company. A liquidity ratio is a financial statistic that is used to assess a company's ability to repay short-term debt. The metric aids in determining if a company's current or liquid assets may be used to cover its current liabilities. The current ratio, quick ratio, and cash ratio are the three most common liquidity ratios. The current ratio is a liquidity ratio that evaluates a company's ability to pay short-term or one-year obligations. For the result, Apple Incorporated is typically considered good compared to the Samsung Company due to the current ratio in between 1.2 and 2. The quick ratio is a measure of a company's capacity to satisfy short-term obligations with its most liquid assets. As a result, Samsung is more able to meet their short-term obligations due to the quick ratio greater than 1.0 and also better than the quick ratio of Apple Incorporated. The cash ratio is a liquidity indicator that compares total current liabilities to cash and cash equivalents. As a result, the performance of Samsung was much more better compared to the Apple Incorporated because the Samsung Company will have greater ability to pay off current debts as they come due. Profitability ratio been analyzed using gross profit margin ratio to signify the profit of company makes after paying off its cost of goods sold. Based on the three ways of calculation, which are gross profit margin, operating profit margin and net profit margin. Samsung recorded the higher gross profit than Apple from 2019 until 2021, but Apple beat the Samsung through operating profit margin which made from dollar of sales after paying for variable costs of production and net profit margin which generated as a percentage of revenues received. It helps investors assess the company's management progress. Profitability ratio also been analyzed using the rate on return ratio till net gain or loss of an investment over a time period, expressed as a percentage of the initial cost. Return on assets demonstrates the growth rate in profits that generated by the assets owned by a company. Return on the equity signifies how good the company in generating returns on the investment it received from its shareholders. Return on capital employed used to assess a company's profitability and capital efficiency. Based on this three graph, we can clearly see that Apple recorded the higher percentage of return profit than Samsung from 2019 until 2021. Samsung and Apple Company shows that inventory turnover decreased from 2019 to 2021. A decline in inventory means the company did not convert its stock to cash ahead of time, while day sales Samsung and Apple increased from 2019 to 2021. For example, Apple rises up from 9.09 days in 2019 to 9.12 days in 2021. Gross profit percentage Apple and Samsung increased from 2019 to 2021. Apple recorded the same percentage in 2019 and 2020, 38%. Samsung and Apple Company receivable turnover ratio rises from 2019 to 2021. Samsung increased from 6.49% to 7.91% in 2021. While day sales Apple and Samsung decrease in 2019 to 2021. The solvency ratio is used to translate the company's long-term debt into an ability to repay the debt as well as the interest charged on the debt. Evaluating the ability to pay long-term debt divide two part. The first part is debt ratio. According result of debt ratio shows Apple Company highest percentage of 79% to do pay off high interest debt. The second part is time interest earned ratio. Result of time interest earnings ratio shows Samsung Company highest percentage of 5.89% paying off debt on lower interest payments. Thanks for watching our video.